Good morning, everybody. Welcome to Monday, the 23rd of May, 2022, and we're really bounced on Friday from really dismal lows. A stat this morning from the guys and girls in News Squawk is that we had a seventh and eighth consecutive low on selling on the Dow and the S&P, and we haven't seen that in 100 years. So we are really at some low prices here, but managing to try and lift up here in the European session. We have Davos kicking off today, and the who's who of the finance world and crypto world as well, speaking in Switzerland right now. Um, but more importantly, we've had commentary out of Christine Lagarde, looking to wrap up the APP purchases by the early third quarter this year, and also seeing that they really do want to start raising the rates. As we know, in July, this is what they're signaling for. Obviously, we kind of know that already. And I think it's just ramping up of the kind of rate hike signaling and forward guidance that we would normally expect out of a sophisticated central bank. So on the back of that, you have seen the euro up this morning, dollar down. Not much support for equities on that, as you could imagine. So just a smidge of selling, and the bund also taking a pullback from a decent push to new highs and closing a gap overnight. But let's have a look at these markets here, and on my screen, you'll see that euro move. Well, I'll actually illustrate it through the dollar on a pullback here. So here is the Dixie index, the dollar index, right? And we have the trend from the high of January 2017 to the high of March 2020, and we busted up over that in April here, and just pulling back now for the second time. But this commentary and forward guidance out of the ECB is the sort of thing that you could imagine could bust the trend on the Dixie here. So the big trade that I'm trying to get on for this is long euro, short dollar, and the short dollar would be something of this sort of magnitude. You're looking at weekly bars here on the Dixie, but something of this sort of magnitude back down to here. um, at least that sort of move, and the inverse, obviously, to be had on the euro. So we pass over to the euro here. We have been trading down, just flirting with these historical lows. The last time we were down here was actually, just let me get this out of the way here, and I'll take my face off the screen, and just kind of looking back here. I know it's not easy to see, but I'll just bring that over here like this. So you can see we're really back here in May 2000, March, April, May 2000 lows. And so if we fast forward to where we are now, that spot 03175 is that low from May 2000, the year after the euro came in. And so, I mean, it doesn't get much lower than this, boys and girls, on the euro. I mean, obviously, two levels down here, but apart from that, we're very low, very cheap on this euro. So the move for me would be, euro back up on the trend here where we broke away from in February this year. So that's the big trade that we're going to be looking to get between now and July, when we get that first rate hike meeting. Obviously no need to go chasing this market right now. We're going to drop the DAX off this morning, and we're going to look at these US markets. So let's go and look at the Nasdaq. And so, as you can see, we are really sitting on the lows around here. We've got, just absolutely murdered on tech over the last while. Using a chart calculator from the top to where we trade at market now is 29%, 29.23% to be precise. Trade here, I think it's cheap enough to start loading up on your pension fund. Well, this is not trading or investment advice, but personally speaking, I would say yes if you want some tech in your pension. I think starting to buy in now would be something I'd like to do. I actually am out of tech the last kind of 6 months, really, in my own portfolios, but looking to get back in, but more concerned about building the new energy EV portfolio. And I did do a video on that. Um, it's on YouTube. Talking about what I want to get into my new energy and electronic vehicles portfolio. But anyway, by the by, how are we going to make money on this today, Tim? Well, there's a gap here on all of these equities. Gap up open, coming out of the lows that we saw last week. I think we need to close this gap. It's looking imminent right now. And then I'm going to stay neutral, really. These markets have done some serious round trips last week, so like none better illustrated than on the SPOOs. Getting into a trade, you just get wiped out on the range. But holding net short, obviously the best trade. But look at the action here, the breadth of the market on Friday. So when we came in Europe, holding above this gap, or sorry, this line in the sand area, 39.15's half, and then just walloping down through it on the open and trading right across. Look at the technical analysis in this. Perfect. 38.09 quarters on the low. Just want to check where I get these levels from. Well, looking on the SPOOs, you can see that I have these levels marked up on my daily. Let's go to a weekly here. You can see this area is the high of the 16th of Feb 2021 to the low of the 22nd of March 2021. And, it's pretty simple stuff, but a nice little shelf there. Do I think this is it? Do I think that's the bottom? No, I don't think that's the bottom, unfortunately. While we have seen good supports on the 38.09 quarters there of last week, it's just not enough, really. It's just not going to be enough. And I certainly need to tidy up this chart a wee bit here. Let's see now. I'm just gonna tidy this up right now like this. Um, no. For me, I think weekly bars. I think there may be a little bit of rallying in here, but I mean, I'm going to stay neutral on this for now. Just watch out for a breach on 38.09s, which will lead us down to 36.14 and a half. And quite quickly, I think. But you're also getting on the weekly exponential moving averages, the 50 crossing over the 20. The 20 crossing down under the 50, I should say. So, more negative sentiment here on the crossovers. Going back to the daily bars to see what we can see. Of course, we've got that 50, the 20 crossing under the 50 there on the 20th of April, leading to what has been just one-way traffic. So look, a nice little doji there last Friday for the candlestick charting technique readers. This does look like a turn point here from what we've seen on Friday. And we need that sort of pattern here to hold, right? This doji turning signal point for a trend. And with that sort of philosophy, I could see us trade up to the 20 EMA here, 20 daily EMA easily. So, not really looking to run after this market here. Because it was essentially when these markets did start to turn down in early April here, March into April, it was tricky trading. It was tricky trading, So let's just kind of sit on our hands really here. And I think the best trades do come like 30 minutes. And a lot comes to you 30 minutes after the market opens. You really see a lot of clarity. Same on the Dow, the SPOOs and Dow with gaps below to close. Looking at it on the daily for the Dow. Well, actually, this is weekly here. Nice supports coming in, 36.10s, the high. Well, multiple highs here from January 2021. Bids coming up into the 39.495s. I'm still not convinced about the big hurrah bid back up. But certainly I think we can get back to, say, 100 weekly exponential moving average here for a test and then further downside. All notwithstanding headline risk. Of course, Joe Biden this morning at an Indo-Asian conference talking about potentially lifting the Trump tariffs on China, and that would be a nice boon for equities to get further upside. So, feeding that into the shape of today, it could provide a little bit of relief on the selling for equities. As for anyone who did trade through the introduction of those Trump tariffs um, on goods into the US, it was quite the downside catalyst, and it was all the market was talking about for several months. Seeing oil now taking a pullback. Look, I think I'm still bullish on oil. Uh, yeah, still bullish on oil. I think the market, has had a hell of a week, 2 weeks here, really. 2 weeks ago, we just got way cheap, tagged the invasion top 95.75 on the July contract here, and just bid back up to where we are. And this is a very old sort of line in the sand for me here. So I think it's just a matter of time before we finish with this pullback you're seeing in the bottom center of your screen, find some buyers in around here, and then we can load up and get up out of this area, and target for, again, 113.30s, 115.12s. But it's just a matter of timing, as always with trading. It's just, you can be right, but if your timing's off, it doesn't matter. So, I'm certainly not suggesting trading is about being right or wrong. It's about, just, compounding gains on trades. That's all it is. So, look, I like the longs. I'd rather wait until we come into the high volume pit session on oil starting at 2 o'clock every day, before then looking to see what way this market's going to go. The bund also, I'm in the bund here for a long duration trade. I think we're doing quite well to hold over this sort of blue range that I have here. You can see it's been well respected this morning on the S1s, but if it comes under fire here, it's not going to be pretty at all. I think we're going to be down to S2 then to test for support and 152.65s. So, do be mindful of that if you are looking for longs in the German 10-year. Gold. Gold. Yeah, look, I mean, gold, while I'm not happy about gold, I don't think anyone really is enjoying trading gold these days, but 1788.6, the high here let me just show you the high here from, when was this? The week of the 9th of March, 2020, sort of around COVID time. And we're holding that now as the defense line for the buyers. And I think we can get back up here into some major highs on gold, but it's not really acting the way it traditionally would. So it's quite hard to get tight risk on gold. So, a really good product, I would say, for scalping. And it's just hard to hold like long duration stuff on gold right now. Okay, that's it for me for a pre-US rundown. Where our Monday rundowns are going to be sort of lengthy like this, and then the following Tuesday through Friday reviews are going to be just focusing on three markets to shorten the rundown and keep it higher quality. So yeah, listen, have a great week. I'll be talking to you tomorrow. Cheers.